We had a strong quarter. We had our record revenue performance in our history. We had about $12 billion top lines revenues in Q3. Demand has never been healthier for the Delta brand and the Delta product. Fuel prices are a concern, as we've been talking about, but fundamentally the business is doing great. Our team's doing great and providing great service for our people, and our outlook's pretty strong.
We're going to talk about jet fuel in just a second, but I know a lot of people are watching. You're real close to Hurricane Michael, although it did not directly impact your operations here in Atlanta. How much has it made you rework things a bit over the last couple of days?
The last 2 days we had some recovery operations. We probably have had about 100 cancels between yesterday and today, primarily focused in the Panhandle as well as in South Georgia. Fortunately, our operations got through pretty well, and we're already starting to turn service back on in the Panhandle. So Atlanta, we had no cancellations yesterday, no cancellations today, so we're welcoming people to come on down.
Let's talk about jet fuel, because the big concern among investors is that as jet fuel prices continue to move higher, that you guys are just not going to be able to recover that increase, and yet 85% of the jet fuel increase you have been able to recover. How have you been able to do that?
Team did a great job in the quarter. First of all, pricing. As I said, demand for the product and the brand has been healthy, so pricing was up 4% in the quarter. Secondly, our non-fuel costs other than fuel, were flat in the quarter. So the productivity initiatives we've been working on have been working, so that also helps offset the cost of fuel. And as a result of that, as you said, 85% of the cost increase in fuel, which was up over 30% in the quarter, we were able to offset over $600 million of that cost. And for the full year, which I'm most impressed by, we're expecting a profit of about $5 billion this year, which is similar to what we had last year, despite an over $2 billion higher fuel price. So the team's doing a great job. The industry is in a very different place than ever before, and Delta's leading the way.
Corporate travel is not slowing down, is it?
Corporate travel is picking up steam. We had double-digit growth domestically in corporate travel as well as internationally. Volume as well as price has been strong. Again, I think a lot of it's the product and the brand health.
And the ability to upsell. In other words, you may say to a corporate client or some of their people, look, you may have a company that says you've got to fly domestic, but we give you the option either through your company or on your own to move up into the higher class, correct?
It's been one of the big changes we've made in our marketing strategy over the last number of years. First class, we used to give first class away to just about everybody in our loyalty arrangements. But today we sell about 50% of our first class seats. Still give away about 50% in terms of loyalty upgrades, but about 50% is sold. We've also redesigned the cabin, so Comfort Plus is a great profit optimization for the aircraft. We've introduced a new Delta Premium Select on our international flights, which is a business cabin going internationally. So it's not about maximizing the amount of revenue you can on the plane. It's about optimizing the plane, getting the price points right, and then getting the seating configurations to match what you're trying to sell.
One last question. You're a finance guy. You watch what's going on with interest rates. Not asking you to comment on the Federal Reserve, but how worried are you about interest rates and what the impact might be on the economy?
Well, for us, we haven't seen much of an impact. I say demand is healthy. We're looking at another 8% growth in Q4 in terms of top-line growth, so demand is continuing strong. At Delta, we've paid down the vast majority of our debt. We got our investment-grade rating back. Our debt levels at arguably our lowest level in our history. We also still have a pension liability. And as interest rates climb, it actually causes the pension liability to come down. So we'll probably be a net beneficiary on the balance sheet from a rise in rates.
And for the overall economy, are you worried about these higher interest rates?
We're watching it, but we haven't seen any demand slowdown. So we'll continue to work hard.